our gold reserves have been dwarfed by China. Looking at it from the standpoint of a global reset, this could just be onshoring gold to the United States because the United States understands there's a reset. And the old saying, he who has the gold makes the rules, you want as much gold on hand as you possibly can. Now, this 400 plus tons is chump change compared to what has been accumulated by central banks over the last 3 to 5 years, and really chump change if you compare it to what China has sourced over the last 10 to 15 years.
In today's news recap, gold prices see further selling pressure as U.S. CPI rises 3% in the last 12 months. The gold market is seeing some solid selling pressure as U.S. consumer prices rose sharply last month, shifting expectations that the Federal Reserve will be able to cut interest rates anytime soon. The consumer price index rose 0.5% last month after December's 0.4% increase. The U.S. Bureau of Labor Statistics announced on Wednesday. The inflation data was significantly hotter than expected. Economists were looking for a 0.3% increase in consumer prices. The report noted that over the last 12 months, headline inflation rose 3.0%. According to consensus forecasts, economists were calling for an unchanged reading at 2.9%. The gold market is seeing consistent selling pressure in its initial reaction to the hotter than expected inflation data. Spot gold last traded at $2,865.90 an ounce, down 1% on the day. It's not only the inflation data that is creating some headwinds for the precious metal, but its rally to consecutive record highs is also prompting some investors to take profits after prices briefly pushed above $2,900 an ounce earlier in the week. Although gold prices remain in a solid uptrend, some analysts have said that its latest rally has placed the market in overbought territory and could be sensitive to moves in U.S. bond markets and the U.S. dollar, which have both moved higher following the CPI data. Weird if you asked me, as higher inflation eventually is good for gold in my book. Share your thoughts in the comments. Tuesday, in his first day of testimony before Congress, Federal Reserve Chair Jerome Powell reiterated to the Senate Banking Committee the central bank's stance that it is in no hurry to cut interest rates as inflation remains elevated and the labor market remains healthy. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
First off, going back to Germany was the first one really to repatriate anything of size. They asked for 300 tons of gold. They were told, oh, it's going to take at least 2 to 3 years to do because of the logistics, blah, blah, blah. It was all bullshit. If they could not do 300 tons in 2 or 3 years, then how can they do 400 tons now in 10 days, 2 weeks time? So that clearly shows that they were lying back then. It's my guess that certainly there's some credence to these COMEX contracts have to be delivered, because if they're not delivered on, then they go to zero and the confidence in futures will collapse. It was really back in, I think it was 2011 or 12, when China began leaking some of their treasuries and onloading gold. If I remember 6-7 years ago saying, and it was easily done, on the back of a napkin, I could show you by 2017-18 that China already had 25,000 metric tons. So that number, in my estimation, is probably 35,000 metric tons compared to the supposed 8,300 tons that the U.S. has, which I don't believe they have. So our gold reserves have been dwarfed by China. Now, getting into the reset aspect of it, I think the last 3 weeks, and 3 weeks ago was the inauguration for Trump, the last 3 weeks, if you cannot see that this is a complete reset upheaval of the status quo business as usual, then you're not paying attention because everything is changing. I mean, just look at the executive orders, and I'm not happy with all the executive orders, and we can get into that if you want or not. But the executive orders are upending the status quo. The way America had been run for the previous 50 years is already changed, and it's going to continue to change. So you've got social issues, you've got financial issues, you have monetary issues. The entire system is in the process of resetting, and I would think that within, 90 to 180 days, you're going to look back to where we were just 3 weeks ago, under the previous administration and the previous, if you want to call it world order. You're not going to recognize in 3 to 6 months where we are compared to where we were.
In today's news recap, silver price drops to 5-day low despite safe haven demands. Silver price surged 2% on Monday, but stalled at the 32.32 resistance zone, triggering a retracement that erased 1% of its gains before closing the session at $32. The decline accelerated in Tuesday's Asian session, pushing silver to a 5-day low of $31.62 before finding support at the 50 EMA on the 4-hour chart. As of the European session, silver has recovered slightly to $31.75, but remains at risk of further declines toward the $31.50 support level. The developments surrounding U.S. President Donald Trump's renewed threats to impose higher tariffs on steel and aluminum imports have increased concerns over global trade stability. Historically, such uncertainties have boosted demand for safe haven assets like silver. However, market participants remain divided on whether these threats will materialize or serve as a bargaining tool in trade negotiations. Additionally, the Federal Reserve's monetary policy remains in focus. Fed Chair Jerome Powell is set to testify before the House of Representatives on Tuesday and Wednesday, with investors keenly awaiting any indications regarding the central bank's stance on interest rates. The Fed's current rate range of 4.25% to 4.50% presents a challenge for non-yielding assets like silver, as higher interest rates diminish its appeal. Don't forget to smash that subscribe button and check out our pinned comment for exclusive VPN offers. Protect your online privacy with NordVPN, the fastest, most reliable service to secure your data and keep prying eyes away. And by popular demand, we've launched our print-on-demand gear for gold and silver stackers. From stylish apparel to unique stacker-themed accessories, it's the perfect way to represent your passion for precious metals. Premium quality, shipping worldwide.
One obvious thing would be to remonetize the gold that we hold. It's on the books at, $42 an ounce. So if they were to remonetize that or revalue that to the current price of $2,900 plus per ounce, you're looking at, I think number somewhere in the neighborhood of 900 billion, close to $1 trillion. So the gold that we hold actually has value of, use the figure of $1 trillion versus, a paltry figure well under $100 billion on the balance sheet. So that would free up, if you wanted to call it collateral, that would free up collateral that they could either borrow against or spend. And that's assuming that they use the current number of $2,900 an ounce. Now, I had done the math, I don't know, 4 or 5 years ago, that in order to cover the debt, gold would have to be $125,000 an ounce, and it's obviously more than that now. But what that, if we had a reset and you got to, really high numbers like $125,000, $150,000, that would allow the Treasury to basically cover the debt with gold holdings. And that I don't think would be frowned upon by foreign nations, because they've been picking up gold left and right for the last few years, and they have gold on their balance sheets, so it would reliquefy central bank balance sheets across the world. So it's that's the obvious aspect of it. Revaluing assets. What about BLM land? Other assets that the U.S. holds. Could they sell those off? I'm not privy to everything that they're considering monetizing, but you're talking about national assets now that they could be monetized. I lean toward it's a gold solution. It's not necessarily a land solution, and I say this because Scott Bessent, the Treasury Secretary, one of his biggest holdings is physical gold. And you have to look back, Trump's family was a gold family. His grandfather or great-grandfather was actually invested in mines. So that family understands gold, and I think they would understand what remonetizing gold would mean. And I think Trump also does understand that the Federal Reserve is, it's neither federal, they don't have a reserve, and the way it was done originally and the way it still is now, basically it's an illegal operation. It's private bankers. So it wouldn't surprise me to see, when all is said and done, where the central banking system itself collapses and you start seeing nations issuing non-interest bearing currency.
What do you think about Bill Holter's insights on the BRICS nations, the silver squeeze, and the potential explosion in gold and silver prices? Are we really on the verge of a massive shift in the global financial system? Let us know your thoughts and predictions in the comments below. Do you see silver and gold skyrocketing soon, or do you think the squeeze might ease up? Let's discuss it. Now, check this video right here because it's a perfect fit for you, and I'll see you on the other side.